Find out what the opinion is from Knight Frank. Gulam, Senior Executive Director at Knight Frank India, joining us on the show. We also have Ashutosh, Limaye, Regional Director of Strategy Advisory and Valuations at Anarock Group, joining in. Gentlemen, thank you very much for joining in. Gulam, let me start with you. First, for our viewers who may, not be very clued in into what ready reckoner rates are and how they impact real estate developers, give us a brief overview and why is it negative for real estate companies?
Well, ready reckoner rates are nothing but what exactly are the market rates going on in the transactions that happen in the market. And the government needs to keep track of all those transactions so that the revenue that it collects on all the transactions has to be in line with that, because if there's a large gap between the two, then the chances of cash transactions actually shoot up. So it's imperative that the government keeps a proper tab on ready reckoner rates. These ready reckoner rates are simply the market realities, just mirroring what's happening in the market. And that is why when the government is changing, in fact, in my view, it should be very dynamic. It should actually reflect the market realities completely instead of changing it once in 3 years, etc., etc. They should do it at least once in a year, which used to be practiced earlier. So reflection of the market is the key. So a buyer or seller actually depend on this rate because the government says that you have to pay the stamp duties and other transaction costs based on the ready reckoner value. If you are doing a transaction at a higher value, you have to pay the stamp duties at that value. But if you're doing it at a lower than market ready reckoner value, then you have to pay stamp duties minimum on that ready reckoner rate. So that is the reality. So in my view, making any changes into ready reckoner is only reflecting what market realities are. Over to you.
Thank you so much, Gulam. We'll get back to you soon. But Ashutosh, let's get you also in on this particular discussion. First of all, could you explain to us the linkage between the ready reckoner rate? Will there be an appropriate or likely similar sort of increase as far as TDR is concerned, as well as the premium rates that companies will have to pay? Today, we are seeing a lot of the Mumbai-based real estate companies take a hit. Is market reading that there could be an pro rata increase both in these two rates as well?
That's correct, because the premium FAR or TDR rates are directly or indirectly linked with the ready reckoner rates. The premium FSI is directly linked and as it is defined, whereas TDR is a market commodity. However, it indirectly gets impacted by the ready reckoner rates. So any increase in ready reckoner rates will have an impact on the premium FSI as well as the TDR, but more so on premium FSI because there is a direct linkage.
Ashutosh, for a property buyer, things have gotten that much more expensive, right? Close to about 4%. In any way, say for Mumbai-based real estate, properties, it was already quite exorbitant, the kind of prices. What kind of impact will this have on the prices in Mumbai? Will they go up by a commensurate amount? Do you think the real estate developers may pass on the entire amount, or will they try and buffer it by taking a hit on their margins? How does this typically work?
Well, the increase in ready reckoner rate is not the increase directly to the buyer, because ready reckoner rate at the end of the day decides the stamp duty. In all these markets, Mumbai, Thane, Navi Mumbai, Pune, the rates in last 2 years, the market rates were already much more than the ready reckoner rates, and the trades were largely done at the market rate. So while the stamp duty the buyer has to pay has gone up because the ready reckoner rates have gone up, the impact on the overall outflow for a buyer is not directly the 4% or 3% ready reckoner rate increase. It is much lower than that because it is the stamp duty increase that the buyer has to now bear, the additional amount. Given that the market rates were anyway higher than the increase that ready reckoner rates have been subjected to, I don't see much impact in terms of the buyer's outflow. But for the buyer of a value housing, where the property price of affordable housing or a low ticket size, the buyers are sensitive. But by and large, the market, the impact will be quite small.
Understood that. Gulam, let's get you back into the conversation. Especially when we're looking at the rates on the outskirts of Mumbai, they are very price sensitive. In this particular case, especially, just a couple of years back during COVID, we actually saw stamp duty rates getting cut in MMR region to go ahead and ensure that there was sufficient demand. do you now feel that there could be a significant drop as far as demand is concerned, especially with the increase in the RR rates?
Once again, I'll go with what Ashutosh just explained, and try to give some numerics to you. When you're talking about 4% increase in ready reckoner rates, the stamp duty is paid at the rate of some 6%, not more than 6%, and which is also an additional percent levied in a year and a half. Maybe the government will pull that back, but 5% is on an average that you're paying on that 4% rate increase, which is very, very minimal. But coming back to what you're talking about, specifically focusing on affordable housing markets, well, you're right, the sensitivities are higher over here. But then you would be surprised that when you talk about the top 7-8 cities of the country, the metro cities, the number of affordable housing sales in Mumbai is the highest across all the 7 cities. Almost about 40% of the transactions that happen below 1 crore ticket size market, which is the peripheral markets that we are referring to. So while it is sensitive, but the impact has not been felt. In fact, what we also going forward, we are expecting is that with interest rate cuts, where we already started seeing the cycle turning and interest rate cuts are expected, the most important factor for affordable housing market is the interest rate at which they're taking the home loan. And with that reprieve coming in, and we are expecting in times to come, in next 2 or 3 quarters, we shall see more reduction in home loan interest rates. We shall see this more or less subsidized or cornered or balanced. So in my view, there shall not be much of an impact on affordable housing. However, affordable housing currently is suffering because lack of supply, because most of the developers have shifted their focus on catering to mid to upper end because the margins are much higher and low-hanging fruits theory. So here we need to really see how do we get the developers back to create more inventory, very less inventory there, and that is what shall have a problem in price rise. Whenever the demand bounces back, we shall see a problem on the prices because more demand and less of supply.
Ashutosh, which areas of Maharashtra or which micro markets will see the greatest impact of these rate hikes, and which are the developers which have a presence in these areas?
No, I think while the most of the urban areas, the property prices already higher than the ready reckoner driven prices. I think it is the extended suburbs of large metropolitan areas which are just starting to get developed as urban centers. These are the sensitive areas. And in tier 2, tier 3 towns, cities like Sambhajinagar, Kolhapur, Nanded, etc., where they are at a cusp of transforming into a district headquarters to a kind of a urban metro, that kind of a stature. There, the increase in ready reckoner rates could be felt more. But in big urban centers, I don't think it's going to impact much. When the news comes, a day or two, the market reacts. But I think it will get normalized very soon.
Thank you so much, Gulam, as well as Ashutosh, for joining in and helping us make sense as far as the impact of the increase on the ready reckoner rates is concerned. In most cases, like you've mentioned, it's more of a catch-up that the state has done. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.